Good day, ladies and gentlemen. I hope you're well. So today we're going to be covering the M2 money supply and its relationship with Bitcoin. We'll be covering everything, what the M2 money supply is, its history with Bitcoin, all the rest of all the good stuff. Um, but before we get into what the M2 money supply is, we need to cover what the M0 money supply is, the M1 money supply. Obviously, the M2 and also the M3 money supply. And we'll also touch upon the ISM as well, because we shouldn't really be getting those confused. Okay, it has a very strong, the M2 money supply has a very strong influence on Bitcoin. We should really know about it. Basically, these M's are layers of liquidity that experts use to measure how much money exists in the system, and how easily that money can be moved. So understanding these categories is important because each one represents a different level of spending power, from physical cash all the way up to savings and short-term deposits. And once you understand how these layers are built on each other, it becomes much clearer why experts focus on the M2 specifically, why historically it's lined up so closely with Bitcoin and major bull runs. If that makes sense. Before we do that, let's talk about what is liquidity. So liquidity is basically the amount of money that's easily available in the economy. It refers to how quickly and effortlessly money can be accessed, spent, or invested without restrictions. When liquidity is high, people, governments, institutions have more cash or near cash assets at their fingertips, which means money flows more freely into the markets, into investments, and then risky assets like Bitcoin. When liquidity is low, money becomes tighter, spending slows down, and the market cools off. And we will see all of this. We'll see exactly how closely aligned they are. And let's talk about the M0 first. So the most basic form of money is known as M0, and it refers entirely to the physical fiat currency, the actual notes and coins issued by the central banks. That includes the cash that people carry, the cash that they have at home, the money that's in tills and businesses, as well as the money that's stored in ATMs and bank vaults. It has to be physical money. It doesn't include anything digital, which is very, very important. M2 is pure money. It's physical cash that's circulating already in the economy. Now the M0, I'm talking about the M0 now. The M0 is important because it's the starting point for us to understand all the other layers of the money supply. Before we add things like bank deposits, saving accounts, everything begins with how much physical cash exists. This also matters in places where a large amount of the population is unbanked. For example, many countries in Africa have to rely heavily on cash. So their N0 plays a big role in everyday activity. In those regions, most of the country's money, the total supply of money, is actually tied up in physical notes and goods compared to digital balances. Just very quickly, guys, can we check if I am live on X, if that's okay? Because this stream is glitching quite a bit, and I think that's because Randy is having such a lovely stream. And I was watching Randy's stream, which was absolutely amazing. It was so fun. And I was started a little bit late here. So just very quickly, we've got John Legend in the chat. Hello, John Legend. I hope you're well. And I need to put down the Princess's Army. There we go. Because John Legend, if you remember, he has the Princess's Army. He supports the channel a lot, and I do follow him. He's amazing. We've got Chica. I hope you're well. The audio's muffled a bit. Okay, let me just double check. I hope that's better. That is actually I'm pretty sure that's a lot better because I can see it spike on the volume bars. Thanks for letting me know, John. Uh, the the volume must have been absolutely awful, but we've got that sorted now. Okay, awesome. Uh Right, so we're talking about the M0 money supply. It's really important in countries, especially like Africa. In those regions, people normally have their money physically tied up in notes and coins rather than digital balances. Now, it's very, very important that we know that the M0 is only physical cash. It's nothing else counts. It's just physical cash, even if it's in a vault. So things like gold, property, business assets, they are not part of the M0 money supply because they aren't money. They're store of value or their investments. There isn't a precise official number for the amount of global M0 because each country measures and publishes its own data and changes it all the time, mainly due to politics. Um, One second. Yeah. Mainly due to politics, etc. But what we do know is that worldwide base, it's a multi-trillion dollar range, and it's the foundation layer before we can even get into the other layers of money. Let's talk about M1 now. So we've deep dived into M0, M1. M1 is a broader um, measure of money and the money supply, and it includes more than just physical cash. It takes everything in M1 into consideration, that's the notes and the coins in circulation, and it adds that money held to the money that's in checking accounts, that's in demand deposit accounts, which is basically current accounts used by individuals and businesses for everyday spending. These are accounts that you can access money easily, instantly, using a debit card, using bank transfer, or ATM withdrawal. Because this money is available on demand and it's without restrictions, M1 represents the most spendable liquid money in the economy. It doesn't just include, but sorry, it does not include saving accounts, time deposits, or any funds that can't be accessed immediately. As of the latest data, the M1 money supply in the United States is roughly 19 trillion US dollars. And that reflects how much cash and instant access banks have to the system. M1 does differ a lot from M0 because M0 is only measured in physical currency, while M1 includes both the physical cash and the balances in current accounts that people use for everyday transactions. And when you combine those two measurements, it shows you how much money is actively in circulation, ready to be spent at any time. What M1 does not include, it does not include gold, it does not include silver. It does not include jewelry. It does not include artwork. It does not include real estate. It does not include stocks or bonds or crypto or business assets. Why? Because M1 is only measuring money. It's not measuring investments and it's not measuring wealth. What M1 includes is just physical cash, that's the notes and the coins, and the money in current accounts and money accessible instantly with debit cards, ATMs, or bank transfers. Everything else, like gold, art, property, that's considered an asset. It's not considered money, so it's not part of the M1. So can you see we're slowly building up? So let's get to M2. M2, the speed is glitching again. Oh my god. Let me just check this one. Okay, I'm gonna do this. Testing, testing, 1, 2, 3. Is that working okay? I'm just gonna reduce the background noise. Automatic adjust mic volume, echo cancellation. Is that working? If it's not, I'm gonna unplug and plug everything again. John, is that working? There's a lag. There's definitely a lag on this system 'cause I can't even see the reply. A little better, but not really. Okay, let me just plug and unplug everything. 1 second. You know what it is? It's Satoshi. Satoshi's always around everywhere. You jump like every week now, so like when you go on, it's so great. It's like having a little baby. How's that? Is that any better? Okay, it's lagging. Let me just get it on my phone. I'll see what you guys are saying on the actual app because the screen's also lagging. 1 second. Get onto it. Can you guys hear me properly then, or do I need to do something else? Let me continue like this. It's still losing sound. That is crazy. What's going on? Oh, hang on. Is that any better? I had Randy playing in the background. Is that any better? I've got no idea. Ah, technical issues. Oh, brilliant. Yeah. So that's what was happening. I actually had Randy playing in the background. Oh my gosh. Oh my God. I absolutely love that girl. She's amazing. Okay, so we spoke about M1. That's coins and notes only. M2 is coins, notes, and what's in your current accounts. And then we're talking about M3. So sorry, M1 was coins, notes, and what's in your current accounts. M2 now. M2 is a measurement of how much money is available in the economy. And that includes everything in M0, M1, and plus the money that isn't available to spend right away but can be accessed fairly easily. This includes things like savings accounts, small term deposits, market money market funds. They might not be instant. They're not instantly spendable like cash, but they can be turned into money quickly. People look at M2 because it shows the overall level of liquidity, how much money is available for spending, how much money is there in savings or investments. When M2 goes up, it means that there's a lot of money floating around in the system. And when M2 goes down, it means that there's less money to use. So naturally, there's going to be less money for Bitcoin. Well, hey, I'm so glad. Isn't it so good when you have like a technical issue and you actually fix it? Oh my gosh. Okay, let's just talk about what M2 doesn't include. So, M2 does not include anything that's not money or easily convertible into money. So, it does not include things like gold, silver, cryptocurrencies, stocks or bonds or artwork. It doesn't include jewelry, it doesn't include property or real estate, things like cars, tools, equipment, business assets, livestock, land. It doesn't include that. Long term deposits, corporation, company institution deposits, and long-term investments or bonds. That's what M2 does not include. What it does include is money, near money that people can use or access fairly easily. So all of M1, which is physical cash, notes, and coins, money in checking accounts and savings accounts, and plus the near money items such as saving accounts, small term deposits, for example, things like when they have those um, fixed term deposits, retail money, our money, also institutional money that's liquid or in short terms savings. These funds are not all used for everyday spending, but they can be converted into cash easily. That's what M2 is. Now, M2 Global is something else that we need to understand. Um, so when it comes to M2, by the way, John Legend, are you in the Discord? Because I do have a Crypto Princesses Army Discord there, channel, which is quite exclusive. So if you're in the Discord, if you're not in the Discord, come into the Discord because I can't remember seeing you there. And then I'll put you into that channel. And the same for you, Chipper, because you've always supported the channel. Bless you. There's no single global M2 number because every country measures its own M2 separately. It's slightly different between countries, and there's no global authority that combines or gives regulations on how to report M2 figures, and there's not one official number. I have heard of some numbers being thrown around. There are hundreds of trillions of dollars for M2. To be fair, nobody actually knows how much money there is in the world, which is really sad. Nobody knows how much M0 there is. Nobody knows how much M1 there is. Nobody knows how much M2 there is. And definitely nobody knows how much M3 there is. However, experts and economists often estimate global liquidity by combining the M2 from major economies such as the US, China, which is really, really big. You always have to take China into consideration now. The Eurozone, Japan, etc. So the concept exists worldwide, but there's no single worldwide M2, if that makes sense. When we talk about M2 and we talk about Bitcoin and we talk about cryptocurrency, we and analysts, we're normally talking about the M2 money supply that is in America. It's always referring to the M2 in America. And that's because the American dollar is the world's reserve currency. And I so badly need to do a live stream on this because I don't think people understand exactly what it means to be a reserve currency and how much influence America has on other currencies and other countries. As a result, Bitcoin itself is valued in USD in most exchanges. And the US liquidity has a strong impact on the global stage. The money supply is becoming the main indicator people are using to understand how the financial markets or the fuel is available for things like Bitcoin. It's not, however, straightforward. Hi, Robsy. I hope you're well. Let's have a look. I need to largen my screen. I'm so bad. I'm so bad. I know. Oh my god, Randy's stream was so fun. Randy gave away some money today as well. So I hope you won something, Rob. That would be so cool. I would love it when good people win. I really do. Okay, so the M2 in other major economies also matter. So countries like China, the Eurozone, Japan, which I just spoke about, they create significant liquidity in their own markets, and together they combined what analysts and experts call global liquidity. Bitcoin reacts to the wider global environment as well, but the US M2 remains a primary reference point because of the dollar's dominance role in the global financial system. So, when we talk about M2, and whenever I'm going to start talking about M2 quite a lot now, especially when we go into start doing more technical stuff and TA and all the rest of it on the channel, technical analytics and all the rest of it, China is massive. It's a massive liquidity engine, the Eurozone, Japan, all the rest of it. All these combined, we will also talk about them because they are really important. But when it comes to America, it's just on a different level. It means that the dollar is the main currency that the world's the countries, the banks around the world use, and they keep it in their reserve. That's why it's called the dollar reserve currency or the world reserve currency. Nations hold dollars because it's the safest and most trusted currency for global trade. What was it before the dollars? What was the reverse current world's reverse currency? It was actually the Great British Pound, sterling pound, and then it's now moved over to the dollar. And then soon, because of America's debt, it's not going to be too many decades before it moves on somewhere else. No fiat currency has ever survived, ever in the history of money, if that makes sense. So most international deals right now, like buying oil, large shipments, world trade, are mainly done in USD, which makes the dollar the center of literally the global financial system. And because the dollar is used everywhere, decisions made by the US Federal Reserve affect the entire world. When the US prints money, it tightens money or it changes the interest rates, other countries feel it too. And that's why analysts look at the M2, the US M2 money supply, when they study Bitcoin, because that is liquidity that impacts Bitcoin the most. We will touch upon M3. Which is very important as well. We just need to know about the M3 because I'm pretty sure I'm going to be referencing it in later streams. But when we talk about larger deposits, we're talking about M3 outside of M2. We're referring to, in this case, money that's held by massive, big financial players, not not retail, if that makes sense, not ordinary people. M2 is M0, M1, M3 is M0, M1, M2, and M3, and these include massive corporations, banks, pension funds, insurance companies, hedge funds, all these other types of really trillion dollar companies. The money that they hold often sits in like these big fixed term deposits or large certificates of deposits. And we're talking about over at least minimum 100,000 US dollars, but that is literally minimum. And then we're talking about going up into the trillions. This money is still part of the financial system. It has to be, obviously, but it isn't used for everyday spending. And that's what M0, M1, and M2 money is. Other countries no longer publish, or many countries don't normally publish M3, the M3 money supply, because it's just too broad. It's too complicated to measure. You can't measure it accurately. And sometimes it's just less useful to understand day-to-day liquidity. For example, America stopped reporting the M3 in 2006, like nearly 20 years ago. Gosh, 2 decades ago. I remember 2006, just a tiny bit. However, some regions like the Eurozone, they still do publish it. And in simple terms, M3 is the bigger picture of the money in the economy. It's not commonly used in Bitcoin analysis because it's not liquid. It's slow, it's less liquid. So we don't really talk about M3 when it comes to Bitcoin and crypto. It's important to understand that even though M3 is the broadest measure of the money supply, it doesn't include things like real estate. It doesn't include gold. It doesn't. Could just imagine the amount of money that there is in the world. It doesn't include stocks. It doesn't include crypto. It doesn't include anything physical investment assets like art. Um, all these, you know, buildings and all the rest of it. This sort of stuff. It doesn't include it because they're not really money. That's not money. That's not what we class as money. They're things of value. M3 simply adds the big, less liquid deposits that massive institutions and corporations keep on top of all the money that's already counted in M0, M1, and M2. It gives a wider range of how much financial capital exists in the system, but it's not spendable, and we don't use it for Bitcoin, if that makes sense. Um, Oh, have fun, Chipper. Trade Intervision, I hope you're well. I hope you're well. I haven't seen you for a bit. I need to catch up on some of your live streams. Okay, before we go any further and we talk about more of the relationship, we do need to touch upon the ISM. What it stands for is the Institution of Supply Management Index, and it's this major economic indicator that measures how active the manufacturing and services sectors are in America, in the US economy. It's based on monthly surveys that go out to thousands of purchasing managers who report whether the business is actively rising or falling or going sideways. When the ISM is above 50, it means that the economy is expanding. When it's below 50, that signals that it's contracting. So it's quite an easy indicator to understand. Because these industries make up a huge portion of the economical activity, the ISM gives experts a early signal of whether the economy is heading up or heading down. But the key thing to understand is that the ISM has nothing to do with the money supply. It doesn't measure how much money exists. It just measures how busy businesses are. That's why during this live stream, we're going to be focusing on the M2, which is directly and very closely linked with Bitcoin. The M2 tells us more about liquidity, which is money that can enter into Bitcoin very quickly or into investments very quickly. It's very liquid. The ISM, however, tells us about the economical strength, the jobs, and production. Most important, both are important macro indicators, but they represent completely different things. Think of it this way. Think of the M2 tells us how much fuel that there is in the system, and the ISM tells us how fast the engine can be running. So it's two different things. They're not to be confused. We should actually start talking about the ISM because it kind of shows what the economy is doing. It's very important. We've got quite a few people watching, but we don't have anyone in the chat apart from a few people, especially John Legend. So if you are watching, do come in and say hello. Let's talk about rotation before we start to get into the charts. So when M2 rises, it means liquidity is expanding. There's more money in the system, and that liquidity doesn't flow into every asset at one time. Historically, it first goes to the traditional stock market. Investors move new liquidity to safe, established assets like the S&P 500 and tech stocks. So stocks tend to reflect first the rise in M2. That's what they react to. After the stock market absorbs the first wave of liquidity, investors they go risk on and they often rotate that money into higher riskier assets like Bitcoin. And that's why Bitcoin usually lags behind the M2 money supply and the stock market. M2 first goes into stocks, then it reacts, secondly, and then it goes into Bitcoin. Um, yeah, and that's just a clear rotation, and we'll go into that. After the stock market, the first wave of liquidity, um, yeah, after the stock market, it goes into Bitcoin. That's why Bitcoin normally lags behind. That's normally why Bitcoin lags behind stocks and it lags behind M2. So what you tend to do is you tend to look at the M2. If that's rising, you know money's going to go into stocks. When the stocks rise, you know it's going to rotate and it's going to go into riskier assets like Bitcoin. And we'll get into the rotation as well. Bitcoin performs best when there's so much liquidity in the system, and we saw this when we had all of that stimulus in 2020 and 2021. And how that affected the bull run. The M2 measures exactly that. It measures things like cash, checking deposits, saving, easy movable cash. When the M2 rises, there's a lot of money in the economy and it goes into things like Bitcoin. When the money expands, central banks tend to ease. Interest rates usually fall, they're normally stable. Borrowing is easier, and investors do feel like taking more risks. Okay, let me just quickly show you a couple of charts before we go forward, and I'll explain these charts now and later. Oh, yes, yes. So happy Thanksgiving to all the Americans. Um, I know it's such a big thing there, isn't it? We don't celebrate anything like that here. Do we celebrate anything like that here? We did have the Queen's when the Queen was alive. We did have her jubilees, her anniversaries, and all the rest of it. But apart from that, we don't really have anything um, like Thanksgiving or more patriotic. We're not even that patriotic, if I'm completely honest. We should have something to celebrate. Yeah, we definitely should. But yeah, no, it's a massive thing there. Mr. 60. I am so sorry. I'm going to have to fix this. I do think it's yeah. I've actually fixed it a little bit, but there's not too much I need to do on on the screen anyway now. Let's just quickly talk about. Let me just remove that. Okay. Can I make that any bigger? I think that's the biggest it will go, which is a little bit annoying. Right. So when we talk about the M2 and we talk about its lag, we normally use something called the 86-day lag or the 108-day lag. These are very common to use in Bitcoin. If the M2 is rising, traders expect Bitcoin to follow, and they use these two windows, if that makes sense. Bitcoin doesn't follow it automatically. This is why when people say Bitcoin will pump, but if the M2 is falling, serious traders will just ignore that. That's just retail hype. Bitcoin rarely pumps when the liquidity is tight. If the M2 is rising, traders consider it a bullish move. And we will go into the macro as well, because it's really important to understand about these divergences as well. Let me tell you why. Okay, let me tell you why there's a lag and why we actually use specifically the 86-day lag and the 110-day lag. So we've just spoken about the rotation. The M2 money supply rises first, Bitcoin rises afterwards. Now, when the money rotates, it normally goes, if it goes into the bond market, it goes there for 1 to 4 weeks. So that's when we use the smaller 86-day lagging indicator. When the money goes into the stock market, it stays there a little bit longer. And that's why we kind of tend to see the 3 to 8 week, we kind of use the 3 to 8 week lag, if that makes sense. And it takes about 8 to 6 weeks for it to go into Bitcoin. So money, bond market first, stock market, and then Bitcoin. And that's why these match these two, specifically these two indicators. Now, if we look at the liquidity altogether, we see stimulus checks, they go very fast into the liquidity. The liquidity goes up. And then we see a quantitative easing that's slower. There's other things like when the banks are lending, that's slower. Saving shifts, that's slower. It all affects how long this takes for the money to move into Bitcoin. So the M2 is backward looking because it's published every month, whereas Bitcoin is forward looking. Sometimes Bitcoin moves sooner, so the lag's only 86 days. Sometimes Bitcoin waits a little bit longer, so it's 108 days. And the shift, the shifts on where the money is going and how it's rotating, you don't get to know that in Bitcoin. So in Bitcoin, let me just take this off for a second. You don't get to see that, or you don't get to know that in Bitcoin. When we have money, Bitcoin dominance goes up. When it goes up, we do expect it to go into altcoins. So we expect that rotation, but we don't have sort of an 86-day lag or 108-day lag, if that makes sense. Not with crypto and not with Bitcoin. So when the M2 rises sharply, traders assume Bitcoin will rise in either around about 86 days or 108 days. If the M2 drops, Bitcoin weakens. And you will see the effects in Bitcoin 86 to 110 days later. It's forecasting the liquidity and it's forecasting roughly what Bitcoin can do. So both of these lags tend to work in different cycles. When we had the second bull cycle for Bitcoin, the 86-day lag matched the best. But when we had the last bull cycle, 2020 and 2021, the 108-day lag worked best. And in other times, different lags work differently. So it's really important that although there's many other ways to measure these, to measure the lag, these two are very, very important because Bitcoin doesn't react instantly. It depends where the money's going. Is it going to bonds? Is it going to stocks? How long it's going to take for it to work through the system? The liquidity has to flow through the banking system, like I said, the bonds, the stocks, etc., before it reaches crypto. And historically, that lag or that delay is usually 3 to 4 months, which, this is why we use these two models, if that makes sense. Now, although the markets do move by liquidity, they don't move by liquidity alone. And there are times when the macro forces override the M2. And that could be because of geopolitical reasons. It could be of regulatory pressure. It could be deleveraging. It could be global risk. I'm going to go into something here very soon. It could be because of the political announcements. And we're just going to go into that because that happened earlier this year. And it was literally a textbook case. So in January, was it in January? I can't remember now. I think it was in January. In January, after we had the presidential inauguration, all the rest of it, the M2 money supply was increasing. But what happened after that? After we had the inauguration, etc., sometime after that, and I don't remember if it was in the February or the March, we had the 100-day tariffs put onto China, or the announcement that America is looking to put 100-day tariffs on China. That was a huge macro shock, and what that caused was it caused uncertainty. It closed global trade, the uncertainty of global trade, the fear of retaliation from China, which was massive at the time. The dollar strengthened. Now, remember, when the dollar strengthens, what happens to Bitcoin? They negatively correlated. When the dollar goes up, Bitcoin goes down. When the dollar goes down, Bitcoin goes up. It's another indicator. Investors rushed and put their money into safer assets, and Bitcoin was the first to dump. So that happened earlier. So at the same time, there was a lot of traders that was long. There was macro uncertainty, and that triggered liquidations. This pushed Bitcoin lower, even though the M2 was rising. And that's why you will see, and you will see it quite often as well, divergences in the M2. Okay, let's just quickly have a quick look. And this is really interesting as well. I'm at 41 minutes. Right, okay, I'm at 41 minutes. Let's just have a quick look at these charts. So here we've got, if I put this on, how do I make myself really small? I want to zoom in on this chart. Okay. Can you guys see that chart okay? I hope you can. My screen's a little bit small. Here we go. I've got it now. Right. Okay. So what we see here is in the black is the price of Bitcoin. So in the black is the price of Bitcoin, and then we have the price of Bitcoin, and we have the M2 money supply. And as you'll see, whereas the M2 money supply, especially from here we've got a divergence here. When was that? That was in 2014. I don't know what happened there. When's this? Okay, here. So let's look at 2000. Let's look at this period here. Oh, it's not letting me zoom in. How annoying is that? Right, okay, so here we go. So Bitcoin dumped here. Why did it dump here? It dumped because of COVID. It went from 9,800 to 3,000. Well, it's saying it went to 5,000, but that's wrong. I know for a fact it went right the way down to 3,800. So from 9,000, it went down to 3,000. That happened because of COVID. What happened straight after this dump? Money was printed. And first of all, it went into the stock market. So here you can see the M2 rising. First, it went into the stock market, and then from the stock market, it went into Bitcoin. So you can see clearly that the M2 was rising, and then Bitcoin followed. And then we've got then we've got what's its name? The first peak here. So here we can kind of clearly see, actually, I had a different graph and I don't know where it's gone now. We can see here that Bitcoin tends to follow the M2 money supply. As the M2 money supply increases, like here especially, you can see Bitcoin increases afterwards. And then when we look at the tops, we'll also notice something else here. Now, I don't know if you can see my cursor, but as Bitcoin goes up, as the M2 money supply goes up, and I don't know if you can see my cursor, I hope you can. As the money supply goes up, Bitcoin peaks before the the money supply peaks. This is really, really important. The Bitcoin peaks before the money supply peaks, before the M2 peaks. We have it here in 2014. So this was the 2000. Do you remember it was, I think it was the 30th of November, Bitcoin hit its cycle top. And then we slid into a bear market. The global liquidity peaks afterwards. As the global liquidity rises, Bitcoin peaks, and then the global liquidity peaks. We go down into a bear market. It rises again. Then we had the two peaks in last cycle. Global liquidity peaks afterwards. We'll talk about why that happens in just a second. There was another chart from TradingView I wanted to show you. I actually really wanted to show you that, but I just can't find it now. So, okay, if we look at the COVID cycle, and that's a real example of all this rotation. Stimulus caused the M2 to surge. Stocks recovered first, and stocks recovered literally. It was a V-shaped recovery. You would see a massive line of people outside the food bank, but the stock market and the traditional markets were making new all-time highs that they haven't made in like 80 years. Why? Because the M2 was first injected into the traditional markets, the bonds, the stocks. They recovered really, really fast. Then followed by Bitcoin. And that's what led to the Bitcoin 2021 massive bull run. And it shows that these lag models are not perfect, but they do work. Earlier this year, like I was saying, the M2 rised again. And loads of people were saying that Bitcoin's going to follow, but it didn't. Why was that? Because of the macro. We had the tariff announcements, we had the macro fear, we had the regulatory pressure, all the rest of it. We had wars going on. So people were taking their money, especially large institutions, and they were putting them into safer assets. The key takeaway here is simple. Liquidity drives long-term cycles, but macro can shock and override it, which is very, very important. M2 gives us the bigger picture, but Bitcoin reacts to expectations, sentiment, and global events. When liquidity rises, the sentiment is really, really strong. Bitcoin thrives. When liquidity goes down, fear dominates, Bitcoin stalls or it drops. And you can actually see this even before it happens when you look at these M2 money charts. So you kind of know where the M2 is going and where Bitcoin should be going. And like I said, there are divergences, and that's because of the macro, if that makes sense. So Bitcoin follows liquidity. But only when the world is not in fear, if that makes sense. It's been 48 minutes. Let me just check the chat. Okay, next week we've got a crypto story. So next week on Tuesday, we've got a collab with Bill Noble. Bill Noble has been doing TA for longer than anyone else I know. He has more experience than anyone else I've known in crypto. Anyone else actually I know ever. If that makes sense, because my brother's in the traditional market, so I do know people. But he'll be along with Formation, who's been pretty much in crypto since 2000 and I can't remember. It was very, very early, but he's been a crypto YouTuber since 2016 or something similar to that. Definitely here when it was 2017. So he's been in the space for a very long time. And we'll be talking about the Fed rates, etc., what the Fed is going to do, blah, de, blah, de, blah, and how it's going to affect crypto. And we'll probably touch upon things like AI as well. This cycle is still playing around. Still playing out. I don't think that this is the end. I do think this is some sort of bear trap. Right now, I don't know how much Bitcoin is, but I think it's like 91, 92,000. If we get above this level, I'm expecting it to go up to about 97, 98, and then from there, I'll see where it goes. But always checking the markets as usual. Thank you so much for everyone who's joined. And hopefully, I will see you on Tuesday. And then on Thursday, we've got a crypto story. But yeah, thank you so much. And John, I'll see you in the Discord. Okay, bye, guys.